So, Guy, the Bank of England does not have an easy time of it these days trying to discern the future.
Absolutely not, David. The Brexit fog is now so impenetrable that the Bank of England really doesn't have any choice but to wait and see exactly what is going to be happening here. It's interesting that the bank is reiterating the rates could move in either direction on a hard Brexit. The market simply does not believe that. It believes that the Bank of England would err on the side of caution and would likely loosen rates in the event of a no-deal Brexit. Not much reaction in the market. There really wasn't much anticipated surrounding what was happening here with the Bank of England. The pound has been weakening throughout the morning. It's not weakening on the Bank of England. It's weakening on what is happening in Brussels. Theresa May expected to arrive sort of circa 1 o'clock London time, 2 o'clock Brussels time. It's all about Brexit, guys.
Yeah, it's all about Brexit, Guy, but also now you're looking at market pricing in like no hikes at all. So at some point you would think that the BOE is going to have to start changing the narrative a little bit just to keep optionality.
Well, I think that's what it's trying to do today. It's basically saying that there is optionality. We could move rates in either direction. It doesn't know what the ultimate outcome is going to be of Brexit. It has always had to model its kind of central case as being a smooth Brexit. We've only got a few days still to go, just over a week to go until potentially a hard Brexit. That still needs to be part of the narrative, though the bank sees it as a tail risk. But it is indicating that it could move in either direction given such a scenario. But you have to wonder how effective monetary policy would be in this kind of scenario. The pound obviously would be expected to move sharply to the downside. Would the bank lean into that or would it lean against that? I think is the question that the market is asking. The suspicion is that the bank would not hike rates if you were to see an inflation shock generated by a pound move lower, because it would see it as being a temporary factor.